MarketWrapWithMo.com.
Welcome back, everyone, to Market Wrap. I'm Mo Ansari, president of Compact Asset Management, and you're tuned in as you've been doing so for nearly 2 decades now. And as always, you can call in, and I will be more than happy to share with you my 33 years of trading experience. Now let's go and talk to someone who knows a lot more about commercial real estate. That is Professor Jerry Nickelsburg. He's a senior economist at UCLA Anderson Forecast and author of the Alan Matkins UCLA Anderson Forecast on Commercial Real Estate Survey Results. Mr. Nickelsburg prepares the economic models and forecasts for the regional economies. His current academic research is on organizational and individual learning in manufacturing and the influence of power groups on the balance of trade. Professor Nickelsburg, thank you for being with us today on Market Wrap.
Pleasure to be here.
Jerry, let's start, okay, if I can call you Jerry.
Sure.
Jerry, let's start by talking about the latest survey suggests there is some light at the end of the tunnel for commercial real estate. Could you explain that? Is it positive? Because so many people have been concerned about these balloon payments coming due in 2010 or 11. What is going on with that?
Sure. Let me first describe what the survey is. The Alan Matkins UCLA Anderson Forecast Commercial Real Estate Survey is a forward-looking survey.
Okay.
And it is somewhat unique in that regard, in that it looks over or sort of past current conditions to the not-so-distant future, but far enough in the future to see what the market is going to look like when things finally shake out.
Mm-hmm.
And we have just concluded a survey. This was taken in December of 2009, and the results of the December survey were sharply different from the results of the June survey. That in the June survey there was pervasive pessimism.
Mm-hmm.
In the December survey there was a good deal of optimism, all with regard to how the markets will look in 2012.
So this is a forward-looking survey, and that's really good because so much of the economic data we get is backward-looking. Basically, it tells us what happened a month ago or 2 months ago in employment or whatever it may be. But this sort of gives us an idea of what to expect. How do you get that forward-looking survey, and how do you do that survey that it tells us what we might expect to see in 2011 or 12?
Right. Well, the survey is a survey of a panel of investors and developers of commercial real estate.
Mm-hmm.
So these are the folks who are going to be building the new stock or refurbishing stock of office buildings and industrial space, or not doing it, depending on how they view the market. And these kinds of projects are long-term projects. They take several years to come to completion, with the entitlements and the planning and engineering and construction, and then finally being ready for occupancy. So they're looking in their current plans out to 2012 and 2013, and we survey them as to how they view markets then. So, of course, if they're very pessimistic, as they were in June,
Mm-hmm.
that means they're not planning any new projects because they won't pencil out. But now they've turned to be optimistic, which means they're at least beginning to look at projects and thinking if they come online in 2012, they'll be ones that can indeed turn a profit for them.
Jerry, when you're talking to developers and people who are in the business, obviously they might have a bias to being positive in the business. But what about financing? If they are going to develop these projects and they are going to build them, is there money available, or is there money? Did they say anything about where the money is going to come from to develop these projects?
Well, they have said that from their point of view, when they do go to get the money, which is not immediate, because if it's a 3-year project,
right,
you don't need the financing for a year to 18 months.
Right.
But when they do go to get the money, they expect that they will need to have a higher threshold level, which means a higher expected rate of return than in the past. And they're going to expect to have to put in a larger amount of equity. So when you think of that in terms of home mortgages, this is a larger down payment and a better credit score, basically. So credit conditions are tighter, but the view is still that markets are going to improve, and so there will be projects that will indeed pencil out.
Overall, is this a positive survey, or this is much better than what you've seen in the last couple of years? Is that what the overall sentiment is of this survey right now?
Correct. A couple of years ago, when we started the survey, we saw a distinction between those areas that had some economic stress due to the downturn in housing and those that did not. So, for example, Silicon Valley and Los Angeles, investors seemed to be more optimistic. But as we got into the recession, everyone turned pessimistic. Mm-hmm. So the survey really does seem to capture how the people who have money or skin in the game are viewing how they're going to spend that money and how they're going to invest, or whether or not they're going to sit on the sidelines.
Because that shows up, on page 4 of this report, you're seeing California office and industrial markets, return of the optimist. That's really, and it gives us all the data of what the building permits look like and where we're headed. But it also talks about the Bay Area office market, and all the listeners right now that are tuned in San Francisco. How does that market look as far as the Bay Area is concerned?
Again, today's market does not look very good.
But moving forward.
Right. Vacancy rates are quite high, and rents are being pushed down. There was quite a lot of space that came on the market and available for rent just as the economy turned south, particularly in the South Bay area. The East Bay in San Francisco has been impacted by the contraction of state government and of retail office space. So the Bay Area is not in great shape. And again, what is surprising is that given all of that, we still see a change in sentiment, and that's pretty uniform across the three major components of the Bay Area. Now, one difference between the Bay Area and other parts of California is there are a number of projects in the Bay Area that were stopped in midstream. So it's going to be easier for developers to bring additional space into the market by restarting those projects if the market turns around in the time frame that the survey indicates it will.
So they don't have to go through the permit process and all of that and the planning process. That's already there. All they have to do is restart the construction, which might have been halted in midstream. And if the market starts to come back, they can bring it back online very quickly.
Correct. Or maybe they have engineering done and site preparation, and then they just need to begin construction. But at any rate, they're further down the road and easier to restart and bring new supply on if markets tighten. And as I said, the panel in the Bay Area is also optimistic. This optimism that we're seeing about 2012 doesn't seem to be based so much on the current situation in the market, but rather on a sense that the recovery is taking hold and it's going to clear out the underwater properties in commercial real estate over the next year to 18 months.
Mr. Nickelsburg, I want to thank you for taking the time out being with us today. Thank you again for being on Market Wrap.
You're welcome.
That is Professor Jerry Nickelsburg from UCLA Anderson Forecast.